Hi everyone. Today is Wednesday, March the 19th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we are staring down a very congested price action event. Now, if you like formations, this might be an ugly head and shoulders pattern. If it is, the average motion, I think, would be value area high minus value area low for a breakdown of about 150 points, okay? And so that would be from the base of the channel. And so that would put us right at about 5,500. Now, won't get there all in one day if that's certainly going to happen. But if you look at those sorts of things, that is on the horizon. The second thing we could possibly be seeing is a bear flag. And, I don't like these types of formations. Just not the kinds of things that I trade, but a lot of people talk about them. And so that is potentially something that we are seeing here. The last thing that we could be seeing is that we are creating a bottoming formation. And that bottoming formation could push us really right up into this big candlestick here of March the 18th. And the high there is 57.10. Now, something super interesting to note is that the 1 hour opening range, again, the floor of it gave us a buy zone. Now, the floor is not always going to give us the buy zone. Here's where that happens. Moving averages generally flat. We've had a punch up into resistance, and momentum is trending to the north. Okay? Even though we are under this flat-ish 50, it still has upward slope. Right? We are coming into the 200 simple moving average. A lot of traders are looking at that on the 1 hour. And you can see also resistance at 56.92 and support below at 56.56. Notice we are inside of the opening hourly candlestick of March the 16th, right? That's the Globex open of March 17th trading day. And we're sitting right inside of it. So my expectation is we go to the bottom of it on any kind of whipsaw action and then move to the north, or we expand somewhat dramatically and go into 57.20-ish and then collapse. This is a very sideways chart. I do not expect forward resolution, but I do expect traders to try to break out of this in some sort of crazy fashion. It could look like this, or it could look like that, right? If we had lower, 56.25 is the low end of the range with a lot of congestion at 56.30. All right, let's go to the NQ. Look at the level of congestion here. You know that my dashed bars, my dashed lines, tell us where the opening candlestick formation is on the Globex. If we stare that down, what we can see is the last big candlestick of March 16th that the ES is in. The NQ has not gotten there. So if they get there so that they can sort of reflexively move together, we are potentially looking at 19,900 as the top of the bounce. Notice the 200 and the 50 are right about a collision course. Look at what we're seeing over prior days. very tight price action coming in to these ranges. My thought is, pullbacks probably going to hold. They could dip lower, and that would put us into the top of the Globex candlestick from March the 13th. That's 19,582. To me, that would be a bounce area. And then we'll see if we can get back up into, the low of that candlestick. Right now, look at what's happened today. Here's the opening range. We broke out. And where did we go into? Remember, the breakout is the buy zone. The low is the stop. So if you're looking for a better test of that low, it's always nice to have candlesticks that look like this. Okay, so it comes in, holds the halfway point. That would be the new stop. You wait for it to break out definitively. Take the trade long. It goes into that prior hour. You take some profit, and your stop is at break even so that you don't lose anything on the trade. If you're like me and you trade a range, because this is balance zone, you would close your position here because you've got flat moving averages, old support, new resistance. You'd wait for the bottom again, and then you take the trade long. Or if you are bearishly inclined, you wait for the collapse of getting outside of this range. So that would be down here. You take the short and you run it right back into the opening range. Take some profit at the high of the opening range. As it gets to the bottom, you cover, because this is a balance zone, folks. It is going to break. My suspicion is that it breaks to the upside, but I am not going to hang on to a trade if I buy the breakout and all of a sudden it fails to hold the low of this very big opening candlestick range formation. All right? So that's what we're looking for in the NQ. Let's take a look at the YM. Same sort of thing, big fat range, right? 50 is moving up, 200 is moving down. That's a cross current. Cross currents will give you candlesticks that retrace each other's ranges. Look at the opening range candlestick of the trading day for March the 18th. Very shallow, breaks down. Here's the opening, right? Where do you trade it into? Support or the prior day's candlestick formation. Notice the difference. This is the March 16th candle that we are looking across all of the charts. The YM is the only one. The YM is the only one that is sitting above that range. I find that to be very interesting, especially with all the chit-chat about foreign divestment leaving the U.S. markets, and the first place they leave is the Dow. So this is very interesting to me. What do we have? Higher lows. We have lower highs. That's a cross current. It's forming a wedge. We're going to have ourselves a break. If we break to the north, we've got yesterday's Globex open at 42,200 as our potential high. If we break to the south, we'll be inside of this candlestick. Value area low at 41,800. First test, 41,600. Second test. Now, notice the trading. If you were trading this today, what you would see is that we've got a sideways range. It's sitting right on top of the point of control and the VWAP. This tells you that the price action could be very noisy. I look at the 50, it's moving up. I look at momentum, it's moving up. I'm looking for the bottom of this range to buy into prior resistance. So this would be my prior resistance. If I took it on a breakout trade, which is right here, but I am looking for, well, let's move that down a wee bit. I'm looking for 42,100. I don't get it. And it starts moving back. I'm going to clip that trade and say, you know what? I'm taking a little profit. I'm going to wait for the deeper fade that gives me the bounce. Notice the bottom of the range closes just above it. The buy zone is here. Target top of the opening range, and then the prior resistance. So I would be at half size at this juncture with my stop at break even, but the longer it sits here, the more likely I am to say, you know what, I'm impatient with the wait. I'll take the rest of my money. It's just a few ticks. Still, actually, fairly nice, and I'm going to flatten the trade. All right? That's what we look at for the YM. Let's take a look at micro Bitcoin. Is that the right number? Nope. We're in the one contract here. Look at the congestion. These dashed lines are the opening range candlesticks. What does it tell you? That we are in a broad area of balance. Very broad area of balance. We have lower highs and a mishmash of lows. So the only thing really telling us any kind of definitive information is at this point, any kind of bounces higher, bring in exit liquidity. Where might that be? Well, the opening range candlestick from yesterday's trading day, that would be March 17th for March 18th's trading. The top of it is 84,390. The prior high, 84,900. Huge liquidity line here at 84,700. If you're looking for a long, that should be a target. If you're looking for a short, you better wait, right? Look at this. All the moving averages underneath us as support. Momentum is very high. Higher lows coming into play. We do have a news meeting today. Deep dips going to be buy zones. What is the deep dip? It's going to be today's opening range candlestick, which was made last night, right? 82,610 gives us the buy dip. If we try to get back into this candle, again, this March 16th candle, visible everywhere for a large move, we just broke out of it. So it could be that it comes in and holds the top of that candlestick formation. You could chase it. You've got about 400 points of risk. There you go. Use a micro, of course, and maybe you'll be in better shape. I would rather wait for the edge if it were me. So I'm going to look for the edges to break and fail to take the short, and the edges to break and fail to take the long, putting me back up into this very wide balance area. Let's take a look at oil. All right. Another chart in incredibly heavy congestion. Look at where the hourly candlesticks are sitting. Right on top of each other. Right on top of each other. So look what happened last night. All right. Here's the opening rate. We're right back there. So a short just triggered in this chart, but it's not a beautiful short. So why? Because my moving average is up on the short term, I'm above the VWAP, and I have momentum. But it still tells me there's a short from the high of my opening range candlestick to the low. And look at what just happened. That trade actually just executed. And if you had your order waiting to close, you'd be in great shape. I would pull this order of going short here all the way, simply because it would be, because I'm above the moving averages, I would look for the opening range low to buy it. Here, I'm shorting. Here, when the candlesticks rotate at the 5 a.m. area, now I'm looking at a long. I'm going to take my profit off at the top. It would have been the same place that the trader got in short and then covered at that 66.59. Where could we potentially go? 67.07. That's the next area. It's the opening candlestick low of the prior trading day. So that's the upside. If I cannot get up over here, I am going to cover the long, because this is still the point of control, and it's very noisy. So I don't want to hang out here. I would rather take some profit, 20 cents, whatever, right? A penny is $10 in oil, so that's not chump change. And so I can sit here, take some profit, leave my stop at break even, because I expect it to hold this zone because everything is moving in this area. The pullbacks are buy zones. And if it loses it, I'm out, right? 3 ticks for the stop. Very nice. Upward edges again, 67.07, 67.28. We do have the EIA report today. On the downward side, we've got 66.40. If we break this low again, 66.31, 66.22, all of these are opening candlestick formations of times past. And then we've got a double bottom here at 66.08. That, folks, is going to be the number that we have to hold. If we don't, we're going to have ourselves a monster cascade back down into potentially 64.80. And I think the buyers step in there again. All right, let's take a look at gold. Gold, I believe gold is showing us a topping formation. Take a look. Higher high, lower momentum, almost testing that high, lower momentum again. So any big bounces look like a sell zone to me. Where would that be? 30.50. I like that as a short. If it gets to 30.52, 30.53, you should be out. Where's the frontline target? Well, notice how tight these opening range candlesticks have been. The last one, of course, March the 16th. The bottom gave us the buy twice, right? We are extended from the 50. I think we rotate back into the 50. Look at how tight the range is here. Hard to trade the range breaks here. So you want to look at trend. And if trend says, hey, I'm moving up, but momentum and price action are suggesting a rotation downward, you wait for the very top of the edge so your risk is the smallest and you trade through it. Notice yesterday's VWAP has held as a support floor for this chart. And so let me change this to a straight line. Let's change the color, right? All right, that's the support area, 30.33. If it loses it, folks, we've got 30.17 and 30.10, and finally 2,999, which is the round 3,000, and then bottom of the range here, 2,991. I absolutely would anticipate that this chart rotates all the way down to here. I expect it to rotate here, but at 2,970. But as it sits, dips or buys. Now, if you use the opening range formation, it is telling you, since we broke out, that the buy zones are at 30.41. So if you tried to short at 3,052, your target would be 3,041. If you wanted to go long, 3,041 to 3,039 should be your support zone. If you lose that by 2 points, get out, because it's going to rotate back down for, 6, 8 more points, and chances are it won't bounce from there, right? But that's what we are seeing. All right, let's take a look at SPY. Same sort of thing, extremely heavy congestion. We're sitting in a balance area, right? 4 a.m. candlestick formations. It's telling us that the high bounce is the long support action at the bottom of that candlestick, which is also the point of control at 560.70. So far, this is telling us pullbacks or buy zones, but because we have a news-heavy day, you want to be super careful, right? Notice this range for March 17th, very tight, but it's been holding as support. So we could lose 560 and drop another $1.20 and go into 559.50 before the price action holds. All right. Upper edges, 565. Lower edges, 556. Qs. Same heavy congestion problem. Just an absolute mess, right? Deep dips. Value area low 468, buy zones, deep spikes, high spikes, shorting area, value area high, that's 482. Where are we right here? Trying to grind higher. We've got higher lows. Looks like a bear flag, but it really could rally, right? It really could rally. Yesterday, a lot of shorts said, ooh, we've got it. And this morning, look at us, we are above the opening candlestick formation. Let me clone one of these guys. Let's clone this guy. Opening candlestick high, 475. Take a look. Let me clone this again. This congestion is insane. Look at that. So what do you do when you see all this kinds of congestion? Go to the very bottom of it and wait for the trade. Or go to the very top of it and wait for the trade. In the middle here, sure, you can make money. Of course you can. But it's going to be hard money. It's going to be hard money to make this kind of trade. We just broke out and then came right back in to the candle body. And now we are sitting back out again. What's going on? Moving averages down and then up, so that's essentially flat. Wait for the baseline. This is a strong line of old support, new resistance at 476. If we break it, we'll have a better shot to the upside. But as of now, it's going to be messy. All right, take care, everybody. I'll see you soon.